So Mike, we can see your screen now as well still, so.
You can see the Zoom screen?
We can see actually the Fifth Third Bank logo.
Okay. All right, forgive me, guys.
So why don't we do this, Mike? If you want to just give an overview
Yeah.
while you're bringing it up, and then because I think that for the most part, you know, the presentation that you was going to run through, a lot of it is just the overall information about the program. So we can do that maybe while you're trying to tee it up.
Yeah, we'll do.
I'll also bring up the PowerPoint, and if you can't get it, Shep, I can then share it from this end, and then you just tell me when to click the pages.
Okay, so I'm on page 1, just a general overview. We'll cover just a general overview. We'll cover the covered cost of the program, forgiveness reductions, timing of loan forgiveness, and any remaining unforgiven portion. So the first end, this is focused around forgiveness, but it also, since we're back open to applications, this is very appropriate for new applications as well. So the covered period is 24 weeks from the date of the loan application, the date of the loan disbursement. Now, if the loan was approved prior to June 5th, you could keep the original 8-week covered period. And the covered period basically is the time period in which you will use the proceeds and to monitor for forgiveness. The covered costs are payroll costs and utilities, rent, and interest on mortgages. So those are the kind of what you can use the proceeds for in order to maintain your forgivability. The payroll covered period, there is an option for an alternate payroll period. So effectively what happened was that the rules came into effect where you could, the covered period was 8 weeks from the date of loan disbursement, but that didn't always correspond with when you needed the money. So that could be, the alternate covered period for payroll could start the date of your first payroll period if you have a weekly or bi-weekly pay period. So if you got the money on, let's say, May 1st, but your first payroll wasn't until May 14th, because you have a 2-week pay period, you could start the covered period for payroll on May 14th and then go 8 weeks from that date for the payroll costs. So that's what's meant by the alternate payroll covered period. So we'll go to slide 5, the timing and what costs are incurred. So eligible payroll costs, they're the costs that are paid during the covered period or that are incurred during the covered period, but paid after the covered period ends by the next regularly scheduled payroll. So let's take that case where you got the loan proceeds on May 1st. You could not use the money for accrued payroll that occurred the last 2 weeks in April. All right. So it's got to be, so let's say you take that to the May 14th payroll period, and then you use 8 weeks. Then at the end of the 8-week period, so that will take you right to through May, June, July 1. Let's say you have a payroll so let's say July 7th. That's after the 8-week covered period for the loan amount after disbursement, but it covers the costs that occurred in June during that covered period. So effectively, it extends that period to the eligible costs that were incurred but not paid during that covered period. Eligible non-payroll costs are paid during the covered period, or again, incurred during the covered period, but paid after the covered period ends by the next regularly scheduled billing. So get the money on May 1st. You go through the 8-week period that takes you through the end of June, but you get your power bill and your gas bill for the June period. You don't get that bill until July 5th or whatever, and you pay that. That is covered in the cost. You would not be able to cover the costs that occurred in, say, April with that first money. All right, so it's basically the costs that occur after the covered period that accrue during the covered period. Utilities that you can use the money for: utilities, gas, water, phone, internet, transportation, things of that nature. Those are covered utilities. We're on page 7. Rent paid or lease payments pursuant to lease agreements for real or business use property that were enforced before February 15th. So, and most would be, but let's say you just executed your lease on March 1st. That would not be, you would not be able to use the proceeds for the lease payments if you executed the lease after February 15th. So it's for rent for your business location or for business use personal property. Now the regs say personal property, but it's business use personal property. So you can't use the proceeds for like your business personal vehicle or pardon me, your personal vehicle. It's got to be for business use, non-real estate personal property. So you can use it for rent there. Interest, you can pay interest, but not principal with the proceeds and be forgiven as long as the obligation was originated before February 15th. So when is forgiveness reduced? There is a reduction in the forgiveness. We're on page 9. If there are unused loan proceeds during the covered period. So let's say you borrowed $100,000 on May 1st. You got the money on May 1st, and you get all the way through the 8 weeks, May and June, and you still have $50,000 left. So you could treat that kind of 2 different ways. You could return the additional $50,000 or keep that out as unforgivable money. Treat that 8 weeks as your covered period, and then treat the balance as a loan that would not be forgiven. Or you could opt to take the extended 24-week covered period and use the money over the next for the total of 24 weeks for covered expenses. If there's a reduction in your full-time equivalent employees, there is a reduction in the forgiveness. So if you had 10 and you reduced to 6, then your forgiveness would be reduced to 60%. And then salary and wage reduction, if the salary that you're paying is reduced, there is a reduction on that as well, proportionate, same way with the FTE reduction. If you use the money for non-payroll expenditures or idle advance, it'll be reduced by that as well. So there's a safe harbor for the hourly wage reduction. And so if you return your employment back to regular employment by December 31st, or by the end of your covered period, then the reductions your forgiveness will not be reduced. So there's a kind of an extended, kind of a safe harbor period where you can get back to normal. If you even after you use the proceeds, if you return your FTE, your salaries back to the back to the normal levels, then the reduction is eliminated. So non-payroll costs, back to those utilities, a minimum of 60% of the loan amount must be used for payroll costs, with a minimum of 40% used on non-payroll costs. So basically, let's say if you got $100,000, you have to use at least $60,000 of that for payroll costs in order to be forgiven for the whole $100,000. Now, with the newest change in the rules, there was they gave some flexibility. So let's say you got $100,000, but you only used $30,000 for payroll costs. So you didn't meet that 60%. And under the original rules, it was 75. And basically, if you didn't use 75% of the loan for payroll costs, then you couldn't get any forgiveness at all. The way it works now is if you got, say, $100,000, if you only used 30 for payroll, effectively you would qualify for $50,000 in forgiveness. So that is 60% of the amount that you could be forgiven for. So they've eased up on that, so it's not an all or nothing. You can have partial forgiveness based on that. So timing of loan forgiveness. Submission of the application. Borrower may submit for application anytime before the date of the maturity date of the loan, including before the end of the covered period. Now, I will say on this that the application process has not been disclosed by the SBA. They are actually still working on the rules on how the banks submit the application for forgiveness to them. So most banks are in a pause on accepting applications for forgiveness until the SBA produces their rules and how to submit the applications to them, because that may create problems with the application itself and the processing. So the SBA, we're still waiting on the SBA to produce documents on how we submit to them. So once we're able to take the applications, we have 60 days to review and acknowledge receipt of a complete application. And then we submit that to the SBA, again, as soon as they produce their guidelines. And then they have 90 days to issue the decision and the funds to the bank. So we anticipate a fairly lengthy process. And bear in mind that you say, why 90 days? The SBA is actually a very small organization. There's only about 3,500 employees in the entire SBA, in all facets of the SBA, including district and regional offices and all the centers. And just to kind of give a glimpse of the size of that, we processed about 1% of all the SBA PPP applications. And we had almost 2,200 people within Fifth Third dedicated to that process. So so we did 1%, we used about 2,200 people. The SBA total is about 3,500, and they've got to process 5.5 million. So it's a very dramatic number for such a small organization to try to process. So page 13, which is the kind of the concluding page, the unforgiven portion. So if you go through the entire process, and let's say you didn't use all the money for eligible costs, and you had partial forgiveness. So you borrowed $100,000 and you only qualified for, say, $75,000 in forgiveness. Here's what happens. If the loan was originated prior to June 5th, the remaining balance according to the original contract, would be termed out at 2 years, 2 years from the original date, at 1% interest to the maturity. Now, the SBA gave the banks the option, if they mutually agree with the client, to extend that to 5-year term at 1%, so you would have 5 years to repay any unforgiven amount. If the loan was approved June 5th or after, you automatically have a 5-year maturity on the loan. Payments are deferred on the application until, and this gets rather complicated, it's 10 months after the end of the covered period. So if you choose a 24-week covered period, and 10 months after that, it basically equates to a 16-month deferment. So you don't have to make payments on the loan for 16 months if you do nothing, if you do not apply for forgiveness. If you apply for forgiveness, the deferment ends once the SBA renders its decision on the application for forgiveness. So you would have to go through the bank application process. They submit it to the SBA. The SBA says, you know, we're going to forgive 75 of the 100,000. The deferment ends at that point, and then you begin making the payments at that point. And there are no prepayment penalties.
Let me add one more thing, Mike, really quick on this.
Yeah.
With everyone. So it's back to that 2-year and 5-year piece. And again, as Shepard mentioned, that it has to be an agreement between the bank and the client. And so, you know, my recommendation is to press your bank for that 5-year if you do choose to go outside of forgiveness. Most of the applications, as we know, were all approved before June 5th, a large portion of it. And we believe that the majority of customers are going to be asking for that 5 years. So make sure that you push really hard with your bank. And then the other piece too, Shep, if you can talk a little bit about this too, is that 16-month deferment. So when does the 5 and 2 year actually kick in? Does it kick in after the deferment period, or does it kick in after the cover period ends?
So the payments would actually, let's say no forgiveness is applied for. The deferment would continue on all loans, regardless of when it was approved, 10 months after the covered period. So it would be 16 months. So even if, let's say you got the loan May 1st, it was before the June 5th deadline, you would automatically have a 24-week covered period, and then repayment would be expected 10 months after that. Now, the problem with that is if you originally would only have a 2-year maturity, so you would have, if you waited that 16 months, then basically you would only have 8 months of repayment to repay that loan. So so unless you ask for an extension from the 2 to 5, then you would only have 8 months repayment. So right. At that point, you would want to make a request to your bank to extend the maturity from the 2 to 5, so you would have, 4 years and 8 months in order, or 3 years and 8 months rather, to repay that.
Yep. And that's the critical piece. And thanks for sharing that, Shep, because I think that there's been some confusion around that. And you look up and you think that your 2 years starts after the cover period, the 10-month deferment after the cover period. In essence, that's included in the 2 year. So that's a critical one.
Yeah.
All right, so we can open
questions
up
from the group.
I know there's been some that's been out there already in the chat, but
Hey, I've got a question, and thank you so much. I'm really hoping that I misheard you, but I heard you say that the idle advance is backed out of the PPP. I hope I misheard you.
No, so the idle advance is backed out of the PPP. So let's say you were approved for 100,000 PPP,
Mm-hmm.
and you took an idle advance of 10,000.
Mm-hmm.
When we process forgiveness, the SBA will see that, and they will deduct that 10,000 from the PPP forgiveness.
Okay. All right, but we can still apply. The 90,000 can still be forgiven. So. Okay.
Yes.
Great.
Yes. Yep. Now that's the idle advance.
Mm-hmm.
The idle loan is treated as a loan, and that's kind of a separate. But this is the idle advance of 10,000 would be deducted from the forgiveness, and so you would net out 90,000. If you had 100,000, 10,000 idle advance, you'd get 90, and then have to repay the 10,000 portion of the PPP.
Got it. Okay. Thank you. Thank you for clearing that up.
Mm-hmm. Yeah.
Jeff, this is Icy. In the chat box, there's one question, are the slides available for distribution?
For their use and reference, yes, but not for presentation to other groups, yeah.
Right.
That makes sense?
Right.
So
Yeah.
I absolutely understand. So I could send this out to the MBEIC community?
Yeah. Yeah,
okay.
We use this. So
yeah.
this presentation is what we're using for our customers. So at Fifth Third, we've created a landing page and a training curriculum for our customers because forgiveness is fairly complex, and you have a lot of smaller businesses that are going to be applying for this, may not have the luxury of having an accountant or attorney walk them through. So this deck is what we're using for our customers to understand the process. So yeah, you can use it, absolutely.
Thanks very much. Are there other questions?
I have a question. I think in the beginning, Kalab mentioned it being a good idea to establish a good relationship with the banking identity or banking institution, and then possibly applying for the PPP loan through multiple avenues. I think you used the example of the what you do when you're at the grocery store. In the beginning, or at the beginning of the application, it says or advises you only go through one channel. So how do the banks handle that if you're applying through two institutions and you have application in over here and you have application over here? Can you speak about that?
Yeah. So I'm sorry, Chef. You want to go ahead first, or because I'm kind of giving you guys some secret rules, right? Because I was on another call in Detroit doing the same thing, and the banker got mad at me because they were like, "Don't tell them that, right? Because it causes more work for the bank." What happens is that, let's say you apply at 3 different banks. Let's say one of them was Fifth Third. Let's say that we get your application through first with E-Tran, right? You only can get one E-Tran number that's attached to your tax ID number, right? So then those other applications at the other 2 institutions, they'll get this thrown out. And banks get upset about that because it's like, it's throwaway work, right? They did all that work of, underwriting your deal and all this stuff, and then they submit it, and you already have a loan at another place. That happened to us, right? And I wasn't upset about it. I mean, I understand it. I mean, I would have been jumping in multiple lines as well. But I think what happened was that the folks who jumped in one line when the first round started and it ran out of money, they were stuck, right? And they had to wait for it to get locked and loaded again, right? So then the second time around, it was still open. It didn't really matter at that point, you were going to get it. But let's just say that it stopped immediately again and it ran out of money. If you were in this long line, I'm not going to name a couple of the banks, but the really large banks where they have 300,000 customers, that line was pretty long, right? So that would be the secret advice. Now, Chef, you can give them the SBA stance. Yeah,
but According to the rules, the application does certify that you're only applying at one bank. Now, I will tell you that, so that's the rule, but there were thousands of instances where there were multiple applications. So that's probably what I'll just stick with. The rules say you'll apply at only one and haven't submitted others. But you only get approved for one no matter what you do. Yeah.
That's right. Yeah, you only get one. You can only get one.
Other questions?
I think a chat just popped up.
So we went a long line for round one and got 3 lines for round 2 and were successful. It's just a comment.
Yeah.
Yeah.
That was us. That was the only way to get it. So.
Yeah. Yeah.
So I have a question.
Go ahead. Mm-hmm.
Hi. So I just want to just confirm, if I apply for PPA, or no, excuse me, PPP, and got it once, then I can apply again?
Oh, no. No, you're only eligible for one PPP loan.
Okay.
From one institution. And the application states that you are only applying once, and you only get one. But there were multiple thousands that applied to multiple banks. They only got approved for one, but they sent applications to multiple banks.
Okay, but if I got approved once, then I can no longer apply for PPP, but I can apply for other opportunities that are out there, right?
Well, yes, a traditional 7A loan outside of PPP or EIDL loan that's direct from the SBA, yes.
Okay, thank you.
Mm-hmm.
This is Kathy. I have a question as well. We applied like the first day and applied for the very basic of what one might need. So as we navigate through it, you realize you might need more money. Can you reapply or additionally apply? I don't know the right word there, but can I get more money?
As of today, no. The program was designed for 2.5 times the monthly payroll. That's what you qualified for. And that was the extent of it. And under today's rules, then no, you may not apply for an increase in your existing PPP loan, nor can you apply for a second for additional proceeds. Now, there is some discussion within Congress to possibly have another program where that would be, you would be able to apply for a second one, but that is it's a long way from being passed. But under today's rules, no, just the one.
Hey, Chef, just to follow up on that. So 2.5 times payroll, if I made a mistake and miscalculated and I actually only applied for 1.5 times, that still applies, right?
Yeah, yeah. Even if you made a mistake, or if you possibly qualified for more but only wanted to take, take a percentage of what you actually qualified for, you only get that one chance. You only get that one chance. Yeah.
Yep.
I got a question. Outside of the, some businesses not going to multiple banks, what are some of the other hurdles that are, I keep hearing stories about businesses not being able to get loans or being denied the loans or whatnot. I don't know if it has anything to do with the business itself or what kind of structure it is, that sort of thing. What are some of the reasons why they wouldn't be able to get the loan if there's so much money left over for it?
Yeah, so that's a great question. To qualify for the loan is actually quite easy. and there's no underwriting. So credit score doesn't have anything to do with it. The financial condition of the borrower has nothing to do with it. Even many of the industries that may not qualify for SBA would qualify, and even larger companies that wouldn't ordinarily qualify for SBA would qualify. So it's by number. If they have 500 employees, and even more in certain circumstances, they would qualify, even if they have, 100 million in revenue and, exceed the 15 million tangible net worth and 5 million net income threshold that normally applies to SBA, they qualify. So of the 40,000 or so applications that we took, only a handful were not eligible because, let's say they had employees that were not domestic, or it wasn't a domestic company. The eligibility criteria was extremely broad, and there was no underwriting, no credit checks, nothing like that. So a vast majority of them would be eligible. Now, things like currently under indictment or on parole, those things are, just things like the very, very rare things like that would disqualify. So if they're, the qualifications for getting the loan are very, very easy, and the threshold is very low.
Dennis, one of the things, and this was to the earlier point about the importance of information and relationships. I've met with several small business owners, not necessarily here in Cincinnati, but across our footprint, where they were applying at different banks, and the bank would tell them that they were going to pull a credit report. They didn't want a credit report pulled, and then they would leave. So there were instances of that occurring across the country where people were just getting bad information. But, to Shep's point, the bar was really low. There was no reason really why anyone shouldn't get this loan.
I have a couple more questions. Are you guys still taking applications? Can you still apply? And what if if you're a really small business, you don't have any employees, you just have yourself, and you're considered a contractor? Can you apply?
Yeah. So yeah, we are still taking applications as of Monday when they reopened I think my dates are right. Yeah, Monday when we reopened the program. The bill was signed on July 4th. We started back up on Monday taking new applications. So yes. Now with respect to a sole proprietor who has no employees, they are eligible for a loan. And effectively, the way we look at it is take the Schedule C, the business files, and the net income is essentially the payroll to the owner. So we take the net income, divide that by 12, and then multiply that by 2.5 times monthly payroll, and then that is the amount that they would qualify for. So yeah, and we had thousands and thousands of applications just like that. As a vast majority of the number of applications were sole proprietors.
Yeah, we did about 37,000 applications, and I think north of 20,000 were those sole proprietors, right? So it was a pretty big number, and the dollar amounts are really small. The other thing that I would add that's really important, particularly as we talk about Fifth Third or any bank, that it's much easier if you're already a current customer of that bank, because you don't have to go through the onboarding process, which can be somewhat lengthy sometimes. So my recommendation is that if you don't have a loan yet, go to the bank that you actually have a relationship with, an account already open. If you're looking to change loans, just be aware that it may take you a few days to actually get access to the funds as they start to onboard you, go through all of the KYC and AML due diligence that all banks have to do.
Thank you.
Hi, can I ask a question? What is the difference between applying at a bank versus applying directly with the SBA?
Yeah, so the PPP loan is not available through the SBA. You have to go through a lending institution. Now that most are banks, but some CDFIs are also participating with the program. So the PPP program is available only through a lending institution. It has a forgivability component. If you use the proceeds for payroll and other utilities and monitor that and track that, and they're able to submit the application with the appropriate supporting documentation, you don't have to repay it. Okay, so it can be forgiven as long as you use the money for the appropriate purposes, apply for forgiveness and submit the supporting documentation and approve for forgiveness, you don't have to repay it.
Yeah.
The EIDL, the Economic Disaster Injury Loan that's processed through the SBA is strictly a loan with no forgiveness component. Now it is on generally extended terms, so generally about a 4% interest rate with up to a 30-year repayment. So it's very liberal terms, but you have to repay all of it. There is no forgiveness component. And so those are not available through lending institutions. They're available only directly through the SBA. Does that clarify? Does that answer your question?
Yes, but I was just wondering if there was a benefit or if it's better to apply through a bank or the SBA. I mean, obviously I think we should apply to the bank because Carlisle's my friend, but you know, just in general, if you're a person who's looking to apply, does it make a difference if you apply through the SBA or a bank?
Yeah, so they're really two separate products. The one through the bank is forgivable. The one directly through the SBA, you have to repay every dime no matter what. So generally speaking, you're better off applying to the bank for the PPP loan if you qualify and can use the proceeds for the intended purposes and you follow through with the application for forgiveness and supporting documentation. You don't have to repay that back. So it's a better scenario for the small business because they do not have to repay it if they meet all the terms and apply for forgiveness. Does that make sense?
Yes. Is that okay? Sorry, this is my last question. I just really want to clarify
because no, it's fine.
You know, other organizations are telling us something a little bit different. They're telling us that the EIDL is a loan, but if you apply for what they're referring to as a PPP directly with the SBA, it is forgivable. And the message is if you go through the SBA, it's easier. You don't have depository requirements. You don't have to have an account with that particular bank, and they have easier or better lending opportunity. You know, it's all these CF something something and all these other kinds of names. So they're telling us that the SBA loan is forgivable, but not the EIDL. And the EIDL requires a credit check where the SBA loan does not.
Right. So the PPP loan that is forgivable is not available through the SBA directly. Now, there are other lending institutions such as CDFIs that are not banks that are processing PPP loans. And so you don't have to have a deposit account with them, and they're they may have, I mean, it's hard to really have any more relaxed underwriting criteria, but you don't have to be, let's say, it's best to apply where you have a banking relationship because it's difficult to meet the new account requirements just for the PPP loan. So you have to basically have a deposit account where you go through we have a system where we have to know our customers, and it's basically an anti-money laundering requirement that we have to go through to open accounts. I mean, for any person. The CDFIs that can process PPP loans don't have that same restriction. So there are other entities out there that are processing PPP loans, and it's completely acceptable and legitimate to go through them, but you cannot apply for a PPP loan directly with the SBA. It's not available. Yeah.
Thank you. And I just want to tell you, my dear friend from college, his name is Michael Shepard, and we've been calling him Shep his whole life.
Well, you've got a new friend, Michael Shepard. So yeah, you can call me Shep too, though, if you want.
Are there any other questions? I see one that says, if a company has no direct payroll employees, but the company works on corporate to corporate and get resources, people from the other company, and pays directly to the other company, can we get a PPP loan?
So they pay
But the company works on corp to corp, so B2B, and get resources, people from the other company, and pays directly to the other company. Can we get a PPP loan?
Yeah, well, they could get a PPP loan for the payroll directly from that company. So the owner of the company could qualify for some, and if they're employees directly of that company, but not if they're using another company's employees and just reimbursing the company for that effectively it sounds like a contract or something where they're paying directly to the company for their employees. That would not, the company that actually pays the employees would be able to qualify, but not that unless they have direct payroll.
All right, any other questions out there for us?
This is Icy. Are there any risks that the banks are taking on these forgiveness loans? You hear noise in the system based off of, where the economics is and where the country is, that, banks are really nervous about these forgiveness loans. So,
well,
yeah.
Are there any issues associated with the applications that are going in and whether or not people will get them just based off of the economy?
Yeah, and I don't know if you want me to take that, Claude. I mean,
yeah, I can take some of that. I think.
Yeah.
So the banks, I mean, we get 100% guarantee on the loan. So if it's not forgiven, whatever is left over. So again, you opt for the 2-year or the 5-year. The SBA guarantees it 100%. So our credit risk is fairly low, right? I think the biggest concern that we've had in the industry was more around fraud than anything else, right? Fraud, operational risk, we make a mistake there, but credit risk wise, we feel pretty good about that. The fees, the interest rate is pretty low, but the fees that the SBA or the Fed pays or the Treasury pays us is they're nice fees. So really, I mean, most banks should really be pretty excited about, taking these applications again, if you can reduce your fraud and operational risk. And the new customer requirements that Mike spoke about earlier kind of gets at that fraud piece, right? Okay. And that operational risk piece.
Are there other questions?
This is Clifford. Kalai, you mentioned earlier, and you knew I was coming with this one. You pulled back the curtain and you let us see what was behind the curtain.
Yep.
And other bankers didn't want you to share. What other insight do you have for us that would be helpful going forward?
Yeah, I think, Clifford, that's the big one. That, that and the fact that the bar is fairly low for getting this, right? So there never should be an opportunity that you walk into an institution and they tell you that you don't qualify for this. Because again, when I speak to a lot of folks out there, right, particularly folks that look like us on the phone, it's the same story where they went to a bank and someone just gave them bad information. Or again, you know, they're banking with a huge bank and they're just standing in line waiting. And unless you knew some folks, so you knew where you were, because for the most part, you didn't know if you were 300,000 or number one. You didn't know what your number was. So again, having a relationship, you know, there were folks, you know, again, and we were the largest PPP lender in the city, and we knew folks didn't get their money in the first round. And, you know, friends would call me and I would tell them where they're at. Say, hey, look, man, your number 10,000, the money's going to run out in the day. You may want to jump in another line, right? So it's kind of hard, and that's why those relationships are so important, Clifford, because you need someone on the inside kind of helping you out when we have one of these type of programs.
Okay. Are there any final questions?
Yeah, I have one if you don't mind. This is just more of like wondering, just trying to gauge the full scope. So I have a company that's just myself. I'm looking to hire to expand. It's an IT company. Are there any options inside of this, any loopholes, any additional caveats that would allow for qualification to get funds in order to bring on additional employees? Or is it solely for those that are currently on the payroll? So can I expand the payroll with this, or only what's currently existing?
Well, to qualify, you have to have employees. So we look back at like your historic payroll records to qualify for the loan amount. So you would have to have that in order to qualify. So, but once you qualify for the amount, you can technically use the funds for any legitimate business purpose. So you could use it to expand. The forgiveness would be if you didn't use it for payroll, you would modify your forgiveness. So let's say you used it for leasehold improvements or something to expand your business. You could do that, but the forgiveness would be affected, and you'd end up with a loan. But in order to initially qualify, you would have to have payroll to get 2.5 times that in order to qualify for the loan amount.
Got it. Okay, thank you.
Okay.
Sure.
Well, it's exactly 2 o'clock, and I just want to take this time to thank everybody for being on the call. I hope this was of value to you today, and I really want to thank our host, Mike and Kalal, for presenting with us today and providing this important information concerning the PPP as well and the forgiveness associated with the PPP. If there are any questions afterward, don't hesitate to reach out to myself or to Lynn Lewis, who's also on the call. And then I can connect with Fifth Third, both Mike and I'll get it correct here.
You're good, Nancy, don't worry about it. It's taking people years to get it right.
I want to call you Caleb so bad. But anyway, so I will reach out to them and get any of your additional questions answered. Thank you again, and you all have a great day and a great rest of the week.
Great.
Thank you.
Thank you.
Thanks, Icy. Thank you. Thanks all.
Thank you. Take care.